Thanks for taking the time to talk with us and our audience today. I'll try to give the overview of Whitestone, but I'll let you do that for us if you don't mind.
Sounds great. Well, first of all, just very much appreciate being able to participate with you guys today, and it's a pleasure to be with you. I'll give a couple minutes on Whitestone and then love to dig in where you'd like to. Awesome. I think the title of your session is Changing Market and Unique Opportunities. I'd like to believe that Whitestone is a great opportunity, and we participate in the retail market. As you know, the headlines today often lump all commercial real estate together. Very simple point, but all real estate is not the same, and then all retail real estate is not the same as well. The retail sector was kind of pronounced dead years ago with the brick and mortar sector, with the emergence of online commerce, as well as kind of the death of the mall and the big box. But today is a very different environment. Your average retail center today looks very different than it did 10 years ago. So what Whitestone does is we are very active managers of neighborhood shopping centers in the Sun Belt. So we're very targeted, focused on 5 of the 7 fastest growing markets in the U.S. We look for centers that are embedded in neighborhoods, and then we try to be a great neighbor. It's a very active business. We're a bit more active maybe than some of our larger peers because we're more focused, but it's very important putting together that tenant mix and knowing the surrounding community. So a bit of our thesis is very active management. One thing that maybe differentiates Whitestone a bit from the others is our sector has really gone all in on on grocery anchored shopping centers. Whitestone is a bit agnostic in that area. We see the value in centers that maybe don't have a grocer. We think there's some risk in grocers that aren't priced in today, and we believe that our centers can outperform a traditional grocery anchored center.
All right, so you're talking about the Sun Belt markets you're in. What is I guess 2 questions. What is so appealing about these markets, and 2, have these markets kind of always been your focus, or is it's kind of areas that you've transitioned to in recent years?
Yeah, good question. So geography is a big part of what we do. I mean, if you've seen obviously the trends in the country, you've had a significant population and job migration to the Sun Belt. We're in the large MSAs in those markets. You also see the shopping center changing to be more of a place where people like to gather and do events. So in the Sun Belt, we typically have more outdoor areas, patios, gathering areas. Our largest tenant sector is restaurants, and we continue to see restaurants doing very well. So, the Sun Belt tends to be, you've had population, job growth, tends to be a little bit less restrictive on the ability of the landlord to do things, to be able to re-tenant centers. And then we continue to see just more startup businesses in our markets than any markets in the country.
Hey, so with these like the restaurant anchored centers, what other type of tenants do you typically see in these properties?
Yeah, so as I said, the retail shopping center is very different today than it was years ago. Years ago, you saw many REITs in our space succeed by filling up centers with big box, hard goods and soft goods retailers, signing long-term leases with those tenants that had fairly flat rate structures. And really in a more static world with low inflation and low interest rates, they had some success. That pitch was, this is a real estate safety investment. And while that is true, it's not entirely true. If some of those folks signed 15-year leases with Bed Bath & Beyond or Toys R Us and woke up 15 years later to a different world, maybe than when the lease started. So Whitestone, tenant mix is crucial. We think this is very much an operating business. We do a lot of research around the community. We understand who the consumers are. We understand what the needs are, and then we look for the best in class operators to fill those needs. If you look at our tenant mix, and you think about maybe a neighborhood center that's around your house, we would have great restaurants. Some of our centers have grocery components. Health and wellness continues to be a growing sector. Fitness is an incredibly important part of many people's lives. Probably should be a bigger part of my life, but continues to be a big driver of traffic. We look for businesses that meet the needs of the surrounding community, places you go to frequently. So an important component for Whitestone is we want to be not a destination retail center on the edge of town. We're embedded in your neighborhood. Where will you go to pick up a pizza? Where will you go to drop your child off for tutorial services? Where you go for your fitness? And one of the big changes we've seen in retail is those activities have become the drivers. Years ago, people went to the shopping center to go to a large department store or a grocery store. Today, people are driven by restaurants. There were a couple articles recently in the Wall Street Journal that talked about this. One talked about the size of spaces. You've continued to see footprints shrink for businesses that operate in centers, and Whitestone is always focused on smaller spaces. It's where you see tremendous demand, entertainment venues, restaurants, services, a lot of just the things you can't get online and the types of services that are needed. Whitestone really showed very well throughout the pandemic. Our operators are dedicated businesses that look to serve the community, look to provide things you can't get online. And one of the things we do is, I think I said, is we do a lot of consumer research to really find where consumers are going, where they're spending their dollars, where they're spending the time. So our big components are food, grocery and restaurant, health and wellness, fitness and medical, services, and education and entertainment.
Okay, so to start off, how old is Whitestone? How long have you guys been around?
Yeah, so we IPO'd in 2010, so a number of years. Time goes by quickly, and then I became the CEO 2 years ago. So I've been in this seat for a couple years. We've always embraced entrepreneurial businesses. We've always embraced smaller size spaces, strong geographies. But over the last 2 years, one of the things we've done is really turned it up, really been able to execute. If you look at Whitestone's results over the last couple of years, we're leading the sector in same store NOI growth, which is really the health of our properties. We've seen our overall occupancy rates increase from the high 80s to the mid 90s in a short period of time. And really our stock has performed well as well, with Whitestone's total shareholder return about 30% over that time period, really compared to the sector of minus 5% or so. So we're starting to click on all cylinders. And one of the great dynamics we're seeing in retail is limited supply. Really, I mentioned that early on retail was pronounced dead. And so you've seen very little retail construction or new development really since the financial crisis over the last 12 years. So in the markets that Whitestone's in, you've got the great combination of population job growth combined with limited supply, which is allowing us to increase rental rates and really grow our profitability.
All right, so you actually answered, what I was going to ask you next. About, you'd said that you've kind of always believed in the smaller spaces. So I was going to ask if that's something that you had kind of transitioned to as you've seen markets change, or if that's always kind of been your thesis. And that also kind of leads us into, one of the questions we have from the audience here. What's commercial real estate going to do as we shift into a more digital world?
Yeah, great question. I think we continue to see technology being an important part of what we do. Whitestone uses lots of technology to understand the community, to really look for what tenants we should have in our centers. But one of the changes we're seeing is small businesses, startup businesses have access to traffic data. A little scary, but obviously the cell phones follow us wherever we go, and there's lots of data on, for picking a location. Yelp reviews are incredibly important for restaurants. So I think the digital world will continue to make it important for operators, for landlords to use the tools that are there. And then Whitestone does that also with the bit of a local sharpshooter targeted approach because we're not spread out all over. We really know our communities. But I think we'll continue to see data and the digital world, driving and helping us all.
Oh, yeah, that makes a lot of sense. One of the things, I'm curious about with this kind of sector specifically, if we do find ourselves in a recession in the next year, which I guess there's arguments both ways whether we will or not. The tenants you have, the operators. I mean, are these how well insulated are these industries, and then how well insulated are you as the landlord?
Yeah, whether or not we see a recession, we see interest rates top out and start to come down. There are a number of factors that frankly we can't control. But what Whitestone does is has a business that has significant downside risk protection in that we have a tenant base of about 1,500 tenants or businesses. Our largest concentration in one of those is 2.5%. So we have really good risk diversification. We have shorter leases, which we love because it enables us to work with businesses that are succeeding and sharing their success, and maybe those that are struggling a little bit to restructure and help them to succeed. So one of the best tests of how you work in a recession probably was during the pandemic. Whitestone was able to have industry leading kind of collection levels, minimal tenant defaults. And part of that is our tenant base tends to be a little more local and regional. And you see operators that have a larger commitment, a larger personal commitment to those businesses. They have family members employed. They rely on that as opposed to national businesses with a local manager. So I'm extremely optimistic about where we are. We get asked about are you seeing weakness anywhere? And we're not. We're seeing our leasing activity being higher than it's ever been. We're seeing our ability to share in the success of the tenants by increasing rental rates higher than it's ever been. And so, a number of things that Whitestone can't control, but we feel very good about being a little bit more nimble and flexible than some of the larger peers, being targeted geographically, really identifying the best in class operators. We pride ourselves in doing a tremendous amount of research on our properties and our communities, and not just picking a tenant, but trying to pick the best tenant for a specific need. So I think I always believe, in tougher times, you need the ability to work and pull levers. Whitestone does that. Also, our lease structures tend to be simpler than some of the national lease structures where you see tenants having control over the landlord. We have a lot of ability to move levers, to re-tenant, to move people around, and continue to do well.
So as you grow your portfolio, I mean, are you seeing better opportunities, with acquisitions, with picking up existing properties, or are you guys, developing, properties to kind of fit your model, or what does that look like?
Yeah. So a lot of ways for Whitestone to grow. One of the things we've been able to do over the last couple years, where the transaction market has been a bit shallow with uncertainty as to interest rates, is we've been able to do a little bit of development. So we'll add a small pad site for a Starbucks or a Dunkin' Donuts. We're able to do those at really good returns and small amounts. So we've got a growth lever in just continuing to add a small amount of leasable area on the properties we have. We also are active in the acquisition market. Retail is a space that's different from some of the other sectors. If you think about the capital that's poured into multifamily, industrial, and office over the last several years, they're in a position now where the returns on those properties and the prices on those properties are challenging, given the higher interest rates. Retail is a category where we're still able to invest with positive returns above the debt level. I think we're getting more certainty as to what's going on with interest rates. So Whitestone positions itself to be able to grow with buying acquisitions in our markets. And we've done a few of those over the last few years, but been a little slower, a little more internally focused. and really building up for what we believe will be an opportunity for well-capitalized companies going forward.
So, I mean, how would you kind of describe Whitestone as far as, I mean, all REITs have, some income play to it, of course, some are more growth focused. Others are heavier on the dividend. Where does Whitestone fall into that?
Yeah, I think good question. I think we fall. We have a dividend that we pay like all REITs. We pay our dividend monthly, so that's one thing that makes us a little different from a retail investor. You're able to get a check from Whitestone every month. We also have a valuation which we feel like has significant upside. As I mentioned, our shareholder returns over the last couple of years, we think that's been positive because of the actions we're taking. We've got a number of those actions ahead of us. So I think that Whitestone, think of us as a targeted, extremely targeted geographic REIT that owns really the best in class type of retail property today and has upside in our price. And then also we believe our dividend, as we increase our profitability, we will also increase our dividends. So we expect to be able to provide a return to shareholders, both in the form of stock appreciation and a dividend that will increase as we increase our profitability.
All right. Increasing dividends. It's always good to hear. We talked a bit about, some of the markets you're in. Are there any other markets that you're kind of eyeing right now? Anything else that looks interesting that you might want to bring into the fold? Yeah.
So, it is when you talk about markets, as you think about the cities we're in Houston and Dallas and Phoenix and Austin and San Antonio. Within those cities, there really are individual submarkets that are very different and have unique characteristics. So in the markets we're in, we're continuing to find pockets of those cities where we think there's opportunities and there's ability to grow and add scale, to leverage our infrastructure we have in those markets. There are other markets outside of the ones we're in today that we think have similar characteristics to the markets that Whitestone operates in. But right now, our near-term focus continues to be on the Texas and Arizona markets, where we see a tremendous amount of opportunity. But should an opportunity arise to enter a market, in the Sun Belt that has similar characteristics, I think we would look at that. We like to have scale. Our properties are a little smaller, so in a market, it makes sense for us to have a minimum of probably 5 or 6 properties where we can put a team of people locally that manage and spend a lot of time with our tenants. So there are other markets, but I would say right now, Whitestone feels the markets we're in have significant growth for us.
Awesome. Well, we might as well just keep going with what works, right? All right. Well, I think we're running out of time here. So before we go, is there anything else that you want to make sure that our audience knows, or you get to tell?
I think I would, first of all, just thanks again for having me. I would maybe just end with, I think I would encourage your viewers to take a look at retail again. I mean, retail has changed significantly over the last several years, benefits from changes in work from home, where you see people orbiting around their homes more often and spending times close to their home. So I'd encourage your viewers to take a look at retail, and then within retail, look at specific property types and markets. And we really think that Whitestone has a great focus and a great target right now. So as I started out, I think I said I'm extremely optimistic about the coming years in the sector we're in, and really appreciate the opportunity to be with you.